Objective is to grow the EBITDA greater than $1.1 billion by 2014 with this commitment of the capacities. As you know, that focused portfolio of industry leading businesses, we are largest in the world in the PET producer, much ahead of the second largest producer, covering entire spectrum of the fiber industry, from commodity to high value-added innovative products, commodity in the low-cost countries, and the innovative products in Western Europe and probably in US. The PTA integration strategy to support the end product strategy to capture the more value chain, that is the focus which we are having, and we employ about 7,000 employees worldwide. This is a real global company, as you got a feel from this video presentation. 27 facilities, 14 countries, and 4 continents, a real vast coverage, a transitional blue chip customer base, a very large customer base globally in all the product lines. Key financial for last 12 months, revenue $5.5 billion, EBITDA of $657 million, return on capital employed 20% in a present low interest environment, which gives a better return on equity. Capital markets, member of major stock indices, S&P 50, FTSE, S&P Large Cap, and MSCI. And recently we were rated A+ corporate rating by TRIS, where we successfully launched our debentures. Next slide. What is the Q3 financial highlights? Production volume went up 6% quarter on quarter and 47% because of the acquisitions globally to 1.21 million tons. Net sales is stable, is subject matter of what is the absolute pricing, up 125% year on year to $1.7 billion. The consolidated EBITDA, in line with the production volumes, went up by 4% quarter on quarter and 34% year on year to $153 million EBITDA. The operating net profit after tax and minority up 8% quarter on quarter and 26% year on year to $86 million. Successful completion of the acquisition in Q1, contributing to earning and cash flow. We have successfully integrated all the acquisitions and they are performing more than what we expected in the budgets. The liquidity, which is very important today in today's market scenario, is increased from $0.7 billion at the end of 2010 to $1.1 billion. So there is a lot of cash available for right opportunities and to meet any contingencies. The net gearing ratio reduced from 48% at the end of 2010 to 39%. So the gearing keeps coming down. Let's look at the volume. In the first quarter of 2010, we were only 953,795. As we have, this is, sorry?
10 and 11.
Yeah, 10 and 11. 10 was 761,000 tons. And this year was 953,000 tons, which got affected by the technical breakdown in line of Indorama polyester for 2 months. In second quarter, last year was 776,000. Here we had 1.14 million ton. We had an unfortunate incident of tornado in Alphabet, shut down for 2 months, which lost 70,000 tons. In Q3, last year was 822,000 ton production, and this year is 1.212 million ton production. So you can see how much growth of the production is there around the world with the acquisitions. If you look at our sales globally, North America is 1.55 billion versus last year 470 million in 9 months of 11 versus 9 month 10. It's 230% growth, primarily of course because of acquisitions, increased production in the existing facilities and the price factor. In Europe, again there is a growth of 66% with $1.2 billion turnover versus 731 million last year, acquisitions and larger productions. Asia contributed $1.5 billion versus 860 million, a growth of 78%. And the rest of the world, which is served from Asia primarily, is $409 million versus 162 million last year, same period, a growth of 153%. So you can see quite a wide spectrum of sales in North America, Europe, and Asia. If you look at the IVL history, how it has grown, in 2006, a company which was only producing 323,000 tons, emerged from Thailand, became a global player with last 12 months of 4.1 million tons of production. In last 12 months, and in 2010 was 3.1 million tons. So it's a great story of successful acquisitions, merging and culturally integrated them, and that's what IVL has emerged as. The capacity utilization remains very high. This is based on re-rated capacities. As you can see, 97 to 98%. Last 12 months was 90%. As we mentioned, that there was a tornado in Alphabet which shut down the plant for 2 months, and also the technical breakdown in the line of Indorama polyester. So group keeps on focusing on high capacity utilization, low cost, and that's where the bottom line comes in. Next slide gives you the growth in sales revenue. If you look at those volumes, how they translate into the revenue, $494 million in 2006. In 2010, we were $3 billion, and last 12 months, Q3, you can see it's $5.5 billion. So this is how the growth has been there. It gives you PET, PTA fibers and others, which includes PET. So the compound average growth rate of 66% in the sales revenue. How did it translate into the EBITDA? Growth in reported EBITDA was 71% per annum. A company which was making only $52 million EBITDA in 2006. Today we have last 12 months $657 million of EBITDA, which is 71% compound average growth rate. How we are able to deliver strong financial returns? The acquisition at cheaper price is very, very important, because that's what brings the bottom line. You can see the IVL consolidated fixed capital investment is only $395 per ton, as against replacement cost of $550 in the world. And working capital, of course, is 173. So this gives you a competitive advantage in terms of capital employed and better returns. If you look at EBITDA per ton, which is the way we manage our business, not in percentage, because percentage can be very misleading in our business because the absolute sales price keeps changing. EBITDA per ton is 110 in 2009. In 2010 is $136, and EBITDA for last 9 months is $156, and EBIT, which is $120. Look at the return on capital employed. The 2008 was the worst, 9% when the world was having economic meltdown. 2009 was 14%, 2007 is 10 and 17%, and last 12 months we have created 20%, an average of 15% ROCE. So this is a very strong delivery on the returns. If you look at the capital structure, we have a debt of $1.238 billion, which is the net interest-bearing debt, and the other liabilities are $911 million. $4.1 billion is the total balance sheet size. And the capital employed and the net gearing ratio, as you can see, the net gearing ratio keep coming down from 70%, 63, 48, and 90, 39%. The capital employed goes up to $3.2 billion because of various acquisitions, increased prices, so more working capital. And so even at the enlarged capital employed, a significant return has been created. We have a very diversified debt exposure. We follow a policy of hedge. As you can know, today's volatility is very, very strong. Morning the euro is 1.38, by the evening it becomes 1.32. So it's very important to manage the risk. We borrow in euro in the European companies. In US we borrow in dollar. And so you can see the composition. So 49% is Thai baht, 41% is dollar, and 10% is euro. And 68% is long-term debt and 32% is short-term debt. As you know, we made a bond issue recently. The right-hand side slide gives you the repayment profile after considering the bond issue, which is 2% as we went for longer period, 10 years, 5 to 10 years. So the 2% falls beyond 5 years, and you can see 15%, 19%, and 18% is in the 2012, 13, and 14. About $199 million was used cash to prepay the debt in direct order of maturity